Hi folks, and welcome to our Alpha Stock Watchlist. And this is a continuation from our previous lecture on alpha stocks, where we walked you through the characteristics, how do you source, screen, and find potential stocks that are going to outperform the overall market. If you're new to our YouTube channel, don't forget to subscribe and hit the notification button so that you can get updates, email alerts on videos like this that can help you improve your knowledge base and perhaps improve or accelerate your level of understanding. So what I wanted to do in this particular video is give you a list of stocks that have been outperforming the market that do fall under the alpha stocks category. And as I provide that list, you can perhaps add it to your own watch list. You can study these stocks, monitor for the next couple of months so that you can understand the behavior, the patterns, and hopefully build your own playbook on how to identify these stocks and maybe improve your ability to pick stocks and ultimately your overall portfolio performance. So with that being said, let's dive into our screen and take a closer look at the list that we've come up with. What you're seeing right here are a list of 10 stocks that do fall under our characteristics of alpha stocks. Here we have number one, Beyond Meat, okay? And here's what's important on Beyond Meat. One, they're up over 208% year to date, but what I pay close attention to is the growth. First, we have top line revenue growth that is over 20%. If you recall from our alpha stock lecture, one of the important characteristics is that these stocks were growing, the top line and the bottom line. They had a new product, better service, something that customers liked and enjoyed, and they also were increasing their market share by penetrating an existing market. And you're starting to see that with Beyond Meat as an alternative to traditional meat products out there. Look at revenue growth for this year, 2020. Expected to be 54.5% revenue growth. Look at 2021, 53, 2022, 41%, and 17%. So very high level of revenue growth on the top line, which will translate to perhaps an expansion of margin, generate higher cash flow, and they can continue to reinvest in the business to expand, grow, and perhaps become a market or one of the major market dominant player in the meat space. And you're seeing it here, and there's capital flowing into this name. This is why they're up 208%. But let's look at other companies, right? The second one on the list is Livongo Health, ticker symbol LVGO. This is a company that has a market cap of 6.8 billion. And also look at the revenue expected over the next 3 to 4 years. So 2020, this year, revenue is expected to be 76.9%. 2021, look here, 57%. Then the following year, 46, and then 2023, 46.3%. This has caused the stock to be up 182% year to date. Let's look at the third stock right here. C Limited, ticker symbol SE. Market cap, wow, this is actually the biggest one in the list that we've created here. From a market cap standpoint, 50.3 billion. They're up 165% year to date. But what is driving that growth? What is driving the overall market or market participants to buy this stock and bid it higher? Look at the growth. 2020, 49%. 2021, 39%, followed by 37% in the following year. Then 2023, 24%. So consistent revenue growth above 20%, okay? And look, in the current market situation with coronavirus, stay at home, a lot of the restaurant and hospitality sector, service sector industries, they have been really punished severely. There's been dislocation in those industries where now you have high unemployment. Up north of 40 million Americans have lost their jobs. And with a high level of unemployment, it means that less people have disposable income. It's definitely going to impact restaurants, airlines, cruise lines, where you're going to see less activity, economic activity in those sectors. And that's one of the reasons why those sectors are down severely and have been punished hard. So even though you have sectors of the overall economy that are negatively affected or more than others because of coronavirus, you're seeing here the opposite in certain companies that have high top line revenue growth and capital is flowing. to these companies that perhaps are going to become dominant player in their industry over the next 4, 5, 6, or 10 years. And one of the ways to anticipate that move, one of the ways to get ahead of it, is to do this level of analysis. See what revenue is going to be over the next 4 to 5 years. And if revenues are growing over 20% year over year for the next 5 years, then you probably have a good stock that has a circular growth story where the economics, the consumer behavior from the business and just direct to consumer standpoint has a long standing strong fundamentals, really, to carry the stock moving higher in the years to come. These are characteristics of alpha stocks that you want to create your list around. So let's continue and look at another one. Here in our fourth list, Schrodinger, ticker symbol SDGR, 7.7 billion in market cap. Year to date, up 163%. And of course, look at the revenue growth over the next expected 4 years, or including this year as well. 22.7% this year. Next year, you get an uptick in revenue growth acceleration, 47.3%, followed by 58.1%, and then of course, 35.3%. These are companies, again, that you want to learn more about the industry, okay? Their product and services. What is fueling that growth and the demand as well? Is it a B2B business to business type service product, or is it a business to consumer type service or product that they are creating? And make sure you understand the fundamentals. And if you have your own technical skills, if you want to apply your own valuation from a sales standpoint, from a PE multiple standpoint, or even a DCF analysis, then you can absolutely do that on these companies to see how much room to the upside they have, or at current levels, when you're looking at sales, PE, and EBITDA multiples, is it just too expensive and we have to wait? As investors, for a pullback, we gotta wait for them to come down to give us an opportunity to re-enter the stock for a bigger move in the weeks and months to follow. And I'm gonna show you what I mean by that when I pull up the charts, and then we apply a little bit of technical analysis. So here is the fourth name, Datadog, ticker symbol DDOG. Market cap, 25.9 billion, up 135% year to date. Look at the revenue growth, 55.3% this year. In an environment where the economy contracted in the second and third quarter with high unemployment, several industries taking bailout packages from the government in the form of loans, and companies are downsizing, and also bankruptcy have been increasing. Here's a company that is not the scenario or what they're experiencing, right? This is a company that is growing, 55.3% revenue growth, almost doubling. Look at the following year, 34.1, then 32.9, and then 30.6%. Again, folks, these are the characteristics of stocks that you want to look for, add into your watch list, study and learn the fundamentals, so that when the market pulls back, when we get another correction and the market is down 10, 15%, you can come to these names and buy them because they are selling at a discount, and you could capture the next wave to the upside. And again, I'm going to give you an example by pulling up the technical so that you can see it visually and recognize these patterns so that you can get ahead of the move next time they happen. We have another one over here, Zscaler, ticker symbol ZS. 14.7 billion in terms of market cap, up 125% year to date. Then look at the revenue growth, again, above market average or above other peer groups, 39.9% this year. Next year, 30.9%, then followed by 27.6%, and 2023, 30.7%. Now, I'm not going to cover the other stocks on this list. It's your job to study them. It's your job to learn the business. And how do you do that? By performing due diligence. I've already done several videos on performing stock analysis. You could watch the Zoom stock analysis lecture, the Netflix, the telehealth, and the Amazon. I've created 4 unique stock analysis to teach you how to perform the fundamentals. And you should do that on your own on each and every one of these stocks so that you can better understand it and perhaps apply technical analysis the way I've also done it in those lectures. And again, what this is really doing is elevating your understanding of the technicals and the fundamentals, and how do you apply chart analysis. You need a plan. You cannot just come in here and buy any one of these names at their all-time highs, because with alpha stocks, with high growth companies, sometimes they get very expensive from a multiple standpoint. And when the market corrects, sometimes these are one of the first stocks that take the market lower, and you do get to see severe move to the downside, 30, 40, 50% in some cases in these stocks. But then they give you an opportunity to buy them. So I'm gonna walk you through that so that you can better understand and improve your game plan, and not come in here without a game and just buy shares, buy stocks because you like the name of the story, and you are really just, what you're really just doing is exposing yourself to losses. Remember, one of the things I always say is minimize your downside. Risk should be number one at the top of your list. If not, it should be rule number one. Risk management, rule number two, don't lose money. Rule number three, don't forget rules 1 and 2. Essentially, you're limiting your downside so that you can maximize your upside, all right? So with that being said, let's change our screen and pull up the actual charts so that you can take a closer look at where these stocks are trading at, and then look very important inflection points, right? Support, resistance, and maybe where I'm looking at to enter these names in the event of a pullback. I'm not just buying these stocks right off the bat at these levels. So let's see what that exercise would look like. Okay, so here we go. So let's pull up the first one we looked at was Beyond Meat, ticker symbol BYND. I'm looking right now at a weekly chart, and you can see that there's major points of inflection. The first thing you want to do is identify those points of inflection. What is a point of inflection? And other technical terms are pivot points. These are where the overall trend changes. And I like to look at weekly charts to identify those pivot points, the change in direction. Here, you can see where some of those point of direction is. Well, in May, I think we could say that this range right here is one. This is when Beyond Meat did an IPO. You see another one over here. Let's draw this here. Point of inflection. You see another point of inflection right here. You see another point, we could say over here, this is all a major point of inflection. And then you have major ones up here, okay? So once you identify these point of inflections, you could draw your support and resistance line. Here, we could drag this across right here, okay? And you can see that in the third and fourth quarter of 2019, when Beyond Meats came down to this area right here, it found support. In other words, it stopped to decline. It found a footing, it found a floor. There were institutional and retail investors that were supporting the stock at these levels. And this is where you see it. It's not continuing a decline, okay? And then what you see from here, it's a major move to the upside that short-term or longer-term traders could have perhaps identified and looked at, and then you got this nice little rally in a very short period of time. Then you could probably say, okay, well, there's resistance over here, right? You can see this dotted lines or these point of inflection right here where the price comes and then basically bounces from it. Let's draw it here as well. Okay, and then we can draw our point of support all around that. Okay, it comes a little bit lower. There it is. And you can see this creates channels, all right? So finds resistance, comes back down, breaks support, and then it identifies the low point, give or take, of the IPO ranges or date, yeah, right around there. So where could you have probably bought this stock if you were looking to get in it? Right around 60 to the low of this range, around 50. So between 60 and $50 is your range where perhaps you want to start taking an initial position. You don't always go all in. You want to break it into 3 or 4 orders where you will first buy a quarter, maybe 25% of your position, then another 25%, then maybe the other remaining 50% you may want to buy all of that once you're getting confirmation that we are breaking, okay, this range as you're seeing right here. So this is one way of applying support and resistance technical analysis. But in terms of where the stock is currently at today, where can we go from this section? Or these levels right here? Here, you can draw an uptrend line. There it is, okay? And if we change from a weekly to a daily chart, zoom out a little bit more, I think we can take this line more up here. There we go, okay. So where would I want to buy this stock if I want to position myself to capitalize on any future upside, given the fact that the fundamentals are strong, is a high revenue growth company, and this might perhaps be a circular move for the next 5 or 10 years? How would I do that? So I will wait for the stock to maybe come back down to around this level, which is around 140, give or take, okay? And provided that I limit my downside. What does that mean? I will probably place a stop right underneath my entry. So if I buy it at 140, if it goes to 135, I'm out, non-negotiable. I'm capping or limiting my downside. But if the trade works, chances are they'll continue moving higher from here and maybe perhaps hitting its all-time high, which is around 238, okay? And that is much higher than my $5 stop on the downside. The upside could be 50 or 100 points, all right? You always want to make sure that your expectancy in the amount of trades that you make, according to your strategy, you want to make more than what you're losing so that the later expectancy, it's positive, okay? So this is how I would look at this stock. I would wait for it to come down and then it can continue to the upside. And again, I'm limiting my downside. Another thing that you can do, if you're very technical, you can do comparable company analysis. You could do multiple analysis by doing sales multiple and coming up with an implied price target. You could also do a discounted cash flow analysis to see what price target your DCF analysis yields. You could also do, if it's applicable to this business, maybe some of the parts, but I don't think they have several segments in their business, so some of the parts valuation might not be the correct methodology to apply to this business. So I'm just giving you several forms of valuating the stock to give you a price target, but more importantly, from a technical standpoint, a tactical action plan, suggested entries and sales. This is how I would look at it. This is how I think about it before I even buy this stock, especially one that is up over 200% year to date. I wouldn't buy it at this level. I would rather wait for a pullback for me to buy it. Shake out the weak hands, and then the strong longer term fundamental investors and maybe institutional investors can come in and support the stock and then take it higher. Okay, let's look at another name. Let's look at the second one in our list, which was Livongo Health, LVGO. There it is. Very similar setup, right? It's breaking out, but let's look at weekly. Look at the weekly. It breaks all-time high. One of the characteristics from our Alpha Stock lecture is to pay close attention to breaking resistance and making new all-time highs. Number 2 was revenue growth, at least over 20% for the next 3, 4, or 5 years. The more, the better. And look at volume. So if we look at the all-time highs, which happened last year, right around here, you can see that the stock broke all-time high. You can see volume in March of 2020. This is perhaps institutional sponsorship. Stocks breaking out on better than expected earnings are all indications and clues of how strong the fundamentals are, and perhaps institutional sponsorships jumping in for a higher move to come in the next 3, 6, 12, sometimes 18 months. And that's what you're seeing right here. Now, if we change, well, before we change our time frame, let's draw here the up trend line, which is around right here. We can connect that. Now let's zoom in more to a daily chart. Here we go. Okay. And you can see how it has performed. Breaking all-time highs. You see here a gap this day right here with higher than usual volume. I believe this was on better than expected quarter earnings, and per our guidelines of finding alpha stocks. You want to find stocks that are gapping up, high percentage gainers, and also due to better than expected quarterly earnings, or known as quarterly breakouts. Okay, you're seeing it right here. So how would I trade this one? I will wait for a pullback. I will not chase up here. I will wait maybe for the stock to go up a little bit more and then maybe come back down to 65, or if it reverses from this level, maybe around 60. Okay, you also have some resistance around this area. I think we could draw. And if it comes down, you want to make sure that the stock finds a footing around 60 so that it can give you an opportunity to buy it, and maybe we can get another leg to the upside. And again, of course, I will limit my downside. I wouldn't let the stock go against me no more maybe than 4 points. My rule of thumb is, as soon as I buy a stock, if it goes against me 7%, I start selling. I don't want the stock going against me 7%. In terms of position sizing, for those of you that are new and don't have that much experience, don't put your entire portfolio in one name or in one idea. You could put maybe 10% if you're new. You could put maybe 15% if you have a little bit more experience. But when you're more advanced, then you can definitely ratchet up a little bit more to 20, 30%. But if you're a first timer, you do not want to put no more than 10%, because you're trying to protect your downside risk. You want to preserve your capital, your portfolio. You want to remain in the game so that you can get enough experience and understand the moves, the patterns. Here's an example of that, which occurred earlier this quarter. Let me clear my drawings. Here's what I mean, okay? We had a nice move breakout right here, get a nice move to the upside. We get a nice little pullback. Then we get another move to the upside. We get a nice little pullback. Then here, we get a move to the upside, but it's around resistance. It doesn't go yet. So you fluctuate here a little bit and then it moves higher. This move will probably continue higher, but I'm not gonna chase. I will wait for another bounce to my trend line, and then it gives me an opportunity to buy it at a cheaper point. I set my stops right below where I buy them, and if it stops me out, it's okay. You can always buy it back. That's the beauty of this. You can always buy it back. But the stops are like an insurance policy, preventing you from further price declines, right? And this is how you trade on the long side companies that have strong fundamentals, that are going to continue to innovate and become the next dominant player in their industry. This is how you play this stuff, folks. And it took me years to learn this, and more importantly, apply the discipline, believing in the pattern, believing in the move, that now allows me to perhaps share it with you. It wasn't this simple when I first started. Believe me, it was very confusing, but it takes time to learn these patterns and to also familiarize yourself with these type of stocks and their behavior and how they unfold for the weeks and months to come. You do not want to be day trading these things, okay? Let's make that clear, that this is not for you to be day trading. Day trading is very risky, especially if you don't know what you're doing. So focus on the bigger picture, focus on good, strong companies that are growing, they're innovating, that have the potential of becoming dominant players by increasing the market shares of those industries, and you want to trade them on the long side. Okay, so this is an example of how I like to think about stocks from a fundamental standpoint, but tactically, how can I get into these stocks with the lowest amount of risk and the highest amount of rewards? Let's look at another name. Let's look at C Limited, ticker symbol SE. Wow, I mean, this is a monster move to the upside. Look at the weekly. See here? See what I'm referring to? They go up, they come down, gives you an opportunity to jump back in, then they move up again, then they come down. See if you can identify it. Take a couple of seconds. Do you see it? Do you see breaking out to all-time highs after their IPO with volume? Can you identify it in this chart? Also, can you identify the pullback? Can you identify the points of inflection? Where would you have gotten in? Where would you have taken profits? Where would you have placed your stop? Right? These are questions that you need to be answering yourself before you even buy a stock. And also, of course, look at the fundamentals. How fast are revenue growing? Here's the list. I mean, well, I already showed you on the list, but if I pull it up again, Look at the fundamentals. Look at sales growth, 49%, 39%, 37%, 24%. Okay, and then the chart pattern, look how it looks. But you could have anticipated this had you found this stock per our Alpha Stock rules and parameters over here. 2019, look at the volume. Look here, breaking all-time highs, breaking resistance. I mean, this is textbook. This is classic. Then you get a nice move to the upside, pulls back, gives you another opportunity to come in, then makes a nice move to the upside, pulls back again. Then this whole move, this is just parabolic. Now the market is identifying these high growth names. They're selling the weak performing industries that are contracting, like retail, airlines, cruise lines, hotels, casinos, movie theaters. I mean, I can keep going down the list on the sectors of the economy that are contracting because of what's been happening with the coronavirus, and that capital has to find a new home. Where do you think they're going to put their name? They're going to put where they're going to put their money is in the names that are growing, that are shaping our new economy for the next 5 or 10 years and even beyond that. That's the psychology behind these massive moves that you're seeing here, because investors, they're trying to find companies that are growing. They're trying to find the next companies that are going to reshape our economy. So would you buy this name at these levels? Absolutely not. But what am I waiting for? I'm waiting for a pullback, folks. That's what I'm waiting for. Here's the first trend line. If we could have drawn it over here. Here's the first major trend line, right? And it already broke from there. So when you're looking at, and of course earlier this year, it broke to new all-time high. So it would have given you 2 opportunities to buy the stock. Here's number 1, and here's number 2, okay? And of course, number 1, if you draw your resistance point, it's right here, comes back where it basically broke from. So you missed it, I missed it. What am I waiting for? So we could apply a few analysis here from a chart standpoint. We can look at Fibonacci retracement. If you are not familiar with Fibonacci retracement, look them up, Google it, get yourself familiar with this terminology. It's just essentially where can the stock decline to. These are like points of inflection or magnets, if you will, that other institutional traders and professional traders, they do look at Fibonacci retracements to see if a stock pulls back, right? If we get a correction on this stock, where can it find a level of support? So typically, I like to look at the 50, okay, or the 0.50 on a Fibonacci retracement. So this would bring it down to perhaps $70 a share if we do get a pullback. The other inflection point that you may want to look at is 38.2. This would bring it to $80. So I have my 50 and my 38.2 as Fibonacci retracement, and this would be my buy zone. So I'm not chasing this stock, I'm just waiting for this. And this buy zone, we can just put a nice little rectangle area. Let's zoom in to the daily. Here it is. Let's move this back a little bit more. And this is what I'm waiting for, right? I'm just waiting for this stock to perhaps come even to as low as $80, or even if it gets in this buy zone area. If the fundamentals are still intact, then I'm going to be backing up the truck. I'm going to be taking small positions when I'm looking at it. So what do I mean by that? I might first buy 20%. If it comes a little bit down, I might buy another 20%. Okay, and then if we start to move higher from my initial point, right? Let's say it comes down here, and as soon as it starts to move higher and leaves my buying zone, then I'll be going and buying the remainder of my share. So initially 20%, then another 20%. Now I have 40% of the position that I want. If we start to get out of the $80 price range and moves higher, then I might add the remaining 60%, and I'll have my full position, and I will hold the stock for perhaps 3, 6, or 12 months, provided that the fundamentals are intact and they're strong. This, ladies and gentlemen, is how you trade on the long side on stocks that have potential of increasing their market share and becoming the dominant players. And when you look at history, right, like companies similar to Amazon, Netflix, Google, Microsoft, okay? Facebook, the FANG stocks. When you look how these stocks perform over the last decade, 10 years, you're gonna recognize the same patterns. So I'm sharing with you my own playbook. How do you position your trade execution plan around these patterns? And that's exactly what I'm sharing with you right here, okay? So this is one that I'm watching as well, and I'm looking at it very closely on my watch list, okay? Let's look at one more. Let's look at Datadog, ticker symbol DDOG. Look at this one, same pattern. So you notice that the market right now, capital is flowing to a lot of these companies that have done an IPO in the last 2 years, but they're growing faster than other industries that are mature, they're old, they're contracting, and again, they're reshaping the new economy. Look here, breaking all-time highs. Let's draw it. Breaking all-time high, look at the massive volume. This was on earnings, better than expected earnings. If I were to draw my, here's one trend line channel, okay? And let's see, if we zoom in on a daily, yeah, this stock is, it's overextended when I really see it. It broke resistance over here, so could have given you an opportunity to buy it temporarily, but me personally, I'm not gonna chase. I'm not gonna chase these names. Ideally, let me pull up my Fibonacci retracement. Ideally, I will want this stock to come down to, here's the 50, here's the 32, and this would be my target area, all right here. Yeah, I would want it to come down to it to the high 60s. Yeah, between $70 and $60. That's where I would want this stock to come down to give me an opportunity to buy it. I'm not gonna chase these names because I know that they can come down rather quickly, okay? Let's look at some examples of stocks that can definitely come down rather quickly after they break out, okay? Here, actually, let's see right here. Yeah, you can even look at Datadog. Look at historically. See here, breaks to all-time high, moves higher, but then look at this, gives it up quickly. See why you put your stops in place? We don't even know if this thing could probably come down maybe to $10 a share, right? But this is why you put your stops in place. Here's one that actually did that, which is Snapchat, ticker symbol SNAP, when they did their IPO. Let's look at the, see? They don't work all the time, folks. See right here, this is why I say use stops. They come out, they do their IPO, comes down, and it's just a stock that got severely punished to the downside. Yeah, this is why I say be careful with these names. Make sure that the fundamentals are intact. Make sure that you're buying right and you're not following or chasing stocks that have broken out from their pivot points. And pivot points, again, points of inflection, your resistance, right? Don't chase these names. Well, now Snapchat, it's in an uptrend, right? We can see that right here. It's in an uptrend. I wouldn't chase this name as well. Even if revenue is growing over 20%, I wouldn't chase it. I would want the stock to come down to give me an opportunity to buy it. I wouldn't chase, but this is why I say that, okay? I also believe Beyond Meat actually did that as well. When they first did their IPO, over here you see, let's look at it on a weekly. See when they first came out in May, breaks out, continues moving to all-time highs, then it breaks out again over here, and then something happened, probably a news profit taking, they bring it down, and then look at that. The stock declined more than 50%. This is why I say have stops. Limit your downside and don't chase. If you're not 100% sure on what your technical analysis strategy is. If I zoom in a little bit more and look at the daily, you can see it here. Right, breaks out initially after their IPO in May, keeps moving higher, breaks out again here around 200, makes a move to as high as 283. A lot of people got in here, right? But the big investors, the ones with more experience, the big traders, they probably bought over here and they're selling it to you up here. So why chase? Give the stock an opportunity or time to consolidate, digest, shake out the weekends. Then you can come in, and the circular fundamental investors that want to own the stock for weeks and months to come, you can ride the next wave with them. Okay, and you see right here, and then after that it just continues going lower. But right now on this one, the trend is to the upside. I wouldn't chase. I would wait for it to come back down, give me an opportunity to buy it, and just have my tight stops that would prevent me from experiencing any major risk to the downside like this. All right, let's look at another one, and this will be the final one that I'll look at. Let's do a Zscaler, ticker symbol ZS. See here, breaking out, volume, better than expected earnings. Let's look at the weekly, same setup, breaking all-time highs, with volume, okay, and revenue growth, of course, is over 20% over the next 4 years. This is one that you may want to track. How am I positioning myself for this? Let's draw the uptrend, our trend line right here. Let's go back to the weekly. Yeah, I'm not going to chase. I want this name ideally to come back down. Wow, to 90 will be perfect. But we don't know if it's going to find support. I don't even know that. Ideally, I want it to come back down to 90 so that I can buy it and then experience the next move or wave to the upside. Right now, there is resistance over here around 110. You can see it on the decline on Friday. So we just have to wait and see. Maybe if it breaks this area and it stays above it, then that could be the other opportunity to get in, but you have to make sure you have your stops in place and understand risk reward on stocks like these that are up over 100% or 200% year to date. But this is the playbook that I wanted to share with you. If you're new to investing, don't worry, study these patterns, studying past winners like Amazon, right? If we quickly let's pull up Amazon and look at the weekly. Look at this monster move over the last decade, right? It looks like a parabolic move, but when you really dissect these trends and look at it carefully and understand the waves, you'll recognize that it's not just a straight line move to the upside. No, goes up, comes down, goes up again, temporary decline, comes up again, declines, goes up again, declines, goes up, a little zigzag, but then moves up again, big correction, stays here for a while, then moves up again, consolidates, moves up again, correction, moves up. Like, again, I can keep going and sharing you this, right? You can see it on one of the best companies in history, Amazon. So the playbook I'm sharing with you comes from my years of studying, analyzing high growth stocks, alpha stocks that can really increase your performance in your portfolio, but more importantly, limiting the downside, protecting your capital. I think that's one of the most important rules that you can focus on. And I think if you spend 80% of your time managing risk, adhering to your discipline and your stops, you'll be much more or a lot better as an investor or a trader than 90% of the public out there, including professional money managers. Because it's very hard, it's very difficult. Trading is very counterintuitive. It's not natural, right? Our bodies, our mind is not wired for the skill sets that require you to develop to be a successful trader. And this is why I say it's counterintuitive, right? When you begin to be fearful, if you have profits and you begin to be fearful that you're going to give those profits, you want to take them right now and sell your position, that's probably the time that you shouldn't do that. That's probably the time where you should be saying to yourself, okay, this is the moment where I should be hanging on to my stocks, not liquidate them and let my profits run and get bigger and bigger. Because if you exit, you're going to end up seeing stocks like this that they're just going to keep moving higher without you being in those positions. And even to the downside, right? When the market is crashing, when there's a lot of fear, there's a lot of panic in the news and in the media, while every other person is selling their shares the weekends, this is where you perhaps may want to come in, take positions on some of these good names that have better than expected revenue growth than everyone else in the market, and you can hold them and buy them. So the old saying, buy them when they're crying, sell them when they're yelling, it's applicable into what I'm just sharing with you. All right, folks, so this is what I wanted to share today. I hope you found this useful. I hope this improves your learning, your methodology, and also you can develop your own action plan when you're looking at the market, and hopefully you look at it from an objective point of view with an action plan, with a nice checklist before you pull the trigger and buy a stock. So with that being said, folks, I hope you enjoyed, and I'll see you in the next one. Take care.